Welcome to Concept Craft. We are presenting step-by-step videos training to crack your certification exam, so you can gain the confidence to take on any accounting challenge. Now let's begin our today's lesson. Reviewing profit and loss and uncategorized account balances. Learning outcomes. In this lesson, we'll cover troubleshooting profit and loss and uncategorized account balances. Topics: compare income to the sales by product/service summary balance. Troubleshooting wages and payroll tax accounts. Check for a reconciliation discrepancies account. Troubleshooting special uncategorized accounts. Getting accounts in order. Clients sometimes make simple mistakes, such as posting transactions to the wrong account type or setting up products and services incorrectly. When this happens, accounts might have an incorrect balance, such as non-zero, at period end. In addition, QuickBooks Online might post transactions it can't categorize to an uncategorized account. How can you and QuickBooks Online help? During your end-of-period reviews, you should always check the client's profit and loss accounts, plus any uncategorized accounts, to make sure that the account balances are correct. With QuickBooks Online, you can work with your client to identify and fix any mistakes that could create errors on their accounts. You need to correct any balances as needed and also determine the correct workflow for the client. In this lesson, you'll learn how to troubleshoot some key profit and loss accounts, as well as any uncategorized accounts that QuickBooks Online created. Compare income to the sales by product/service summary balance. Before you start to review individual profit and loss accounts, you should check that the balance on the sales by product/service summary report matches the income for the same period. Note that, when doing this, you should make sure that the reports are run on the same reporting basis. So, if running one report on an accrual basis, for instance, the other report should be on an accrual basis as well. If the two figures don't match, you should investigate the discrepancy. Select the headings to find out how to check that the balances match. Step 1. Run the sales by product/service summary and detailed reports. First, run a sales by product/service summary report to get the total sales for each product and/or service. You'll find this report in the Sales and Customers section of the Reports Center, or by using the search field in the header section. To view the fine detail of this information, run a sales by product/service detail report for the same period. This report shows all the products and services used on sales transactions for the period, including those mapped to asset or liability accounts. This might happen if a retainer item was used on an invoice. We'll cover this possibility later in the lesson. Step 2. Run a profit and loss report for the same period. Next, run a profit and loss report for the same period to get the income for this period. Step 3. Compare the sales by product/service report to the income from the profit and loss report. Now compare the sales by product/service reports to income from the profit and loss report. What if the profit and loss and the sales by product/service reports don't match? There are several possible causes for the discrepancy. Something may be posting incorrectly to the income accounts, or there could be an issue with how the products and services are set up. Transactions incorrectly posting to the income accounts. Income accounts may also have been affected by non-sales transactions that post directly to an account, rather than using products/services. These could be deposits, journal entries, or purchase transactions. Also, a product/service could be set up incorrectly by assigning an income account to the purchase expense account field. To determine if this is a problem, select the total income figure in the profit and loss report to run a transaction report. Then sort this report by transaction type. You can then look at those individual transactions to determine what corrections need to be made. Then correct these entries. Products and services posting to non-income accounts. Some product/service items on invoices, credit memos, and sales receipts legitimately post to non-income accounts, such as client retainers or bad debt expense. In this case, you should customize the sales by product/service detail report so that it filters out those non-income items. To do this, filter the distribution account for all income accounts in the dropdown. You have to filter the sales by product/service detail report because the sales by product/service summary report can't be filtered for distribution account. Then select Run Report. Now you can see the total of all sales transactions for the period that affected income accounts. The two reports, profit and loss, and sales by product/service detail, should agree. Products and services set up incorrectly. Some product/service item income accounts may have been mapped incorrectly. For example, they may map to an expense account rather than an income account. Or the opposite, an expense account posts to an income account. You can find these errors by customizing the product/services list to add columns for income account and expense account. First, sort the customized product/services list by the income account. Then edit any items that have incorrect income account mappings if necessary. Check the box next to also update this account in historical transactions. Next, sort the report by expense account. Edit any items as required. Then check the box next to also update this account in historical transactions again. What if some of these historical transactions are in closed periods? If this is the case, uncheck the also update this account in historical transactions box. Save the changed mapping. Run a quick report for transactions using this product/service item in the current period. Edit each transaction on this report with a replacement line using the corrected product/service item. Then delete the old line, making sure that the transaction totals are unchanged. Finally, save each corrected transaction. Troubleshooting wages and payroll tax accounts. You should be able to compare wages and payroll tax accounts to the payroll returns to make sure they agree. If you can't do this, someone may have incorrectly posted transactions to one of those accounts. What should you do if the wages and payroll tax accounts don't agree with filed payroll returns? Run a transaction detail report for either the wage or tax account and investigate any transactions that are not payroll type transactions. Check for a reconciliation discrepancies account. Suppose you see a reconciliation discrepancies account in the client's chart of accounts. This means the client forced a reconciliation by adding an adjustment, even though the difference between the statement balance and the cleared balance wasn't zero. Because reconciliations should only happen when the difference is zero, QuickBooks Online segregates the unbalanced transactions into a reconciliation discrepancies account for further scrutiny. This is the only situation when QuickBooks Online creates a reconciliation discrepancies account. The reconciliation may need to be undone and re-reconciled. How can a client force a reconciliation? They would do this as follows. First, the client carries out a reconciliation on an account. However, the statement balance they enter doesn't match the cleared balance. Rather than entering corrections to make the difference between the two balances zero, the client selects Finish Now. When QuickBooks Online displays the following message, the client selects Add Adjustment and Finish. Note that clients can first change the adjustment date, which by default is set to the statement ending date. QuickBooks Online then informs the client that they have reconciled the account, and the client selects Done. QuickBooks Online adds a reconciliation discrepancies account to the chart of accounts, as shown here. How can you fix this? This is where you come in. Select Run Report from the Action column and check the reconciliation discrepancies account balance. Ideally, this account should have a zero balance. If it has a non-zero balance, as shown in the example below, you and your client need to investigate every transaction to determine if you need to undo and redo a bank reconciliation, for example. Troubleshooting special uncategorized accounts. Now let's look at the uncategorized asset, uncategorized income, and uncategorized expense accounts. QuickBooks Online adds these to the chart of accounts by default. Each account should have a zero balance. If any of them don't, investigate all the transactions that caused the non-zero balance. Someone may have incorrectly added transactions through the banking center without changing the account. Because an account has to be assigned to a transaction, QuickBooks Online uses these uncategorized accounts as default accounts. What else could cause a transaction to appear in an uncategorized account? If the automation setting for prefill forms with previously entered content is activated, see below, and someone uses an uncategorized account when entering a transaction for a vendor, QuickBooks Online will suggest they use the same account next time they enter a transaction for that vendor. They might accept this suggestion without changing the account. Summary. Learning outcomes. Well done. In this lesson, we covered troubleshooting profit and loss and uncategorized account balances. Knowledge recap. You can now identify and resolve errors in your client's profit and loss accounts as well as fix uncategorized account balances. You can also guide and support clients to follow the correct workflows so they don't make similar mistakes in the future. Next steps. In the next lesson, we'll look at troubleshooting issues with undeposited funds.